Now, everyone, let's gather in. Let's take a seat for the next fireside chat. I get paid by how many people are sitting up here, so if you could help me out and do me a favor and come up to the front. I'm going to introduce one of the most famous luminaries of the crypto market in Eleanor, Terrett, who hosts a show called Crypto in America. She is probably the poster woman of all things regulatory and policy, being joined by an equally as a luminary figure for a fireside chat. Welcome up stage. Come on. Introduce the fireside.
Thank you, Frank. With my esteemed panel partner, Sunayna.
Thanks for setting that low bar.
Yeah, for real. Hey, everyone. Happy afternoon. How was the food? Good, right? Yeah.
Parasite free.
I was
I
cautious.
hope you all took out the lettuce.
Oh, my goodness, yes. I did take out the lettuce because someone else at the table did, and I was like, I'm going to do it too. Anyway, Sunayna, welcome.
Thank you.
Yeah. So we've known each other for, I think, a little bit under a year at this point. We met.
She got me in trouble. That's how we met.
I did get her in trouble for,
Which doesn't take a lot, by the way.
I tried to schedule something at the Fed, and it wasn't like through the right channels, and I had to go through the public affairs office, and the public affairs guy got mad at us. But anyway, it was at SALT last year, which, gosh, coming up on a year, SALT, Wyoming. But let's go back to, that time. So you were Chief Innovation Officer at the Fed, where you were for 5 years. And we had a little discussion before the panel. I think you and I have had similar career paths in that we have kind of landed in our careers randomly. There was sort of no planning. It was kind of just like, okay, here we are, and we're just going to grab the bull by the horns and go. And I'm curious how you kind of became CIO of the Federal Reserve. How did you get onto that path, and why did you stay? And kind of just give us a breakdown. We'll start there.
Oh, okay. Well, thank you for having me. Ellie and I like to make good trouble together, so we're going to try and do that here. I like to say serendipity. It sounds fancier than random.
Yes.
So I joke that before I joined the Fed, I pretty much spent my entire career fighting with the Fed. So I was in private sector all of my career, fintech, crypto, capital markets. Had no plan about working at the Fed. In fact, as I said, I spent all my time dunking on the Fed because they were not embracing crypto and stablecoins because they were all about central bank digital currency. I was no. So anyways, had zero plans. And serendipitously, I got a call one day from an executive recruiter saying, I'm calling on behalf of the Fed. They're creating this new role, and they would like to talk to you. I actually thought one of my Bitcoin bro friends was pulling a prank on me. I'm like, yeah, sure, the Fed wants to talk to me. Anyways, that's how the journey started. I started from a mindset of innovation, central banking, isn't that like an oxymoron? To then spending 5 years at the Fed, building an entire innovation practice. And what I would submit now is not only innovation at a central bank, actually public sector at large, not an oxymoron. I would say it's highly imperative that public institutions embrace and activate innovation just as much as it's expected of private institutions, right? We always look at private institutions and say, hey, you got to keep up, you got to be innovating, but we always cut slack. Oh yeah, but public institutions, they're slow, they're behind. We cannot cut them that slack, and we can talk about why a little bit more. How
did you do it? So you got there and you created this program, but you started from scratch. Was there pushback when you got there? Were they kind of like, who is this woman trying to come in and push us into the 21st century? What was that like?
No pushback. They rolled the green carpet.
Yeah,
no, easy peasy. No, I'm just kidding. Listen, I went into it not knowing, honestly, what I was doing. The reason ultimately why I said yes to it, they really didn't know what they wanted, other than they were creating this brand new role. And the interesting part of it was it wasn't tethered to any one reserve bank or the board. It was like working with the entire solar system. As I joke, the Central Bank of the United States is not at all central. They've known DeFi since 1913. So it was working with the entire system, and I just wanted to serve my country, so I'm like, fine, I will do this, but it was like a high beta trade. Either it was gonna work or wouldn't work. Well, I stayed 5 years. So going in, I knew I had to go in with a lot of humility, right? Like everybody at the Fed is highly tenured. They've all been there like 10, 20 years. So I was coming from industry. I didn't know anyone. Not only was I coming from industry, I was coming from like a grubby part of industry they didn't like, crypto, right? So I just had to go in with a high degree of humility, but ultimately help them recognize that the risk of not doing was starting to be greater than the risk of doing, right? And part of it is, number one, the volume, the variety, and velocity of technologies that were just coming at them and just happening, like, are unfathomable. And the Fed, both in embracing and applying that technology, but also as a policymaker, like, how can apathy be an option, right? Yes, we're risk averse. We're a large institution with a very important mandate. Break things and ask for forgiveness is not going to work, right? Right? And I would never propose that. However, not doing anything is not an option. So it's like meeting them, where they are and bringing them where they need to go. But yeah, no, listen, I'm not exactly at a central bank to be working at a central, not at a central casting to be working at a central bank. And I give the Fed a lot of credit for totally going out of their comfort zone. But it's like meeting them where they are. And the last thing I would say is putting a lot of quick wins, right? Like, don't go for the big things right away. It was really putting a lot of quick wins in the beginning and then tackling the heavy stuff. And the last thing I'll say is the way we structured our team was, think of us as the speedboat within an aircraft carrier. Because what I knew right away was the Fed is an aircraft carrier, and even at full throttle, it is only going to move at a certain pace. So I'm not going to get this aircraft carrier to move as fast as I would like it to. But what I can do is launch a bunch of speedboats that can really go out there and, interrogate these frontier capabilities in the context of the central bank, and then have them ship those wins and then scale it within the aircraft carrier. And that model really helped us ship a lot of wins, scale it, and then, make the presidents and the governors look good, and, that always helps.
And this was 2020 that you went
into
the
I
Fed?
started, it's 2020, early 2023 I started.
Oh, early 2023, okay. So this was right around the time of, I'd say, Operation Choke Point 2.0. So that's a term that the crypto industry is very familiar with, sort of what has been described now. And I think, in Senate Banking Committee hearings, the president himself has talked about the system-wide debanking of the crypto industry. And I guess my question to you is kind of like, what was it like going in at that time to a Fed that, on the outside to the crypto industry really felt very unfriendly and really didn't seem like it wanted to innovate very much? Maybe it was a different feel on the inside, but what was that sort of, contrast like? I mean, it sounds like it maybe wasn't that way on the inside, but how was that for you?
Oh no, it was jarring and depressing. And I tried to quit many days. Actually, it was a lot of people I know and trust and respect in the crypto industry who are like, no, you cannot leave, right? Because if the change happens from within, right? I think Governor Waller really well, and we both laugh that in the last administration, they weren't just trying to drive crypto out of DC, they were trying to drive people like him and me and others, like a small group of us out of DC. And we're like, no, we're not leaving. We're going to stick it out, and we're going to try what we can do. But no, the headwinds were very, very strong. And the other part of it at the Fed that was also important is, like, the hands-on keys component was very important to me, right? Like, again, for those of you who've been in crypto long enough know, some of the early guidance and rules from regulators, including the Fed, but all regulators, was like, hello, have you used a MetaMask wallet? Like, have you launched a protocol? Like, it was very evident that you haven't touched the technology. Mm-hmm. And I'm very adamant that as a policymaker, like, how do you put out a policy if you've never like touched a policy? Like, you can't admire technology, you've got to activate it. To me, it's like, you want to run a marathon? Okay, what are you going to sit watch YouTube videos of him running a marathon? Like, right. Sorry. No, you're going to have to lace up your shoes and get out there. So I think with crypto, that was such a downfall. And I think that represented itself in that dark period because a lot of opinions and, shady stuff and FUD was being rendered by people who had never actually touched the technology. And with AI, I'm happy to say at the Fed, completely different posture. And I think even with other policymakers where they're using the technology, understanding the technology, even applying the technology, which I'm bullish you will see in how they render policy. Doesn't mean the industry is going to like everything, but it will demonstrate a level of pragmatism and prudence.
Why is it so different for AI than it was for crypto?
I think one difference is like, AI is something that touches everyone, obviously, as consumers. So, it's relatable in that way. Crypto obviously wasn't something that touched every normie. It was a very small subset of users. So I think there's that. Second, I would, like to think that a hard lesson was learned. And for this, there was at least at the Fed, there was a conscious effort. ChatGPT came out 2022. By January 2023, we had activated, at that time it was really chat, models. We even activated Hugging Face for those developers in the room. Again, now we did it in a safe, quarantined way, away from all the important systems, but and it was for everybody, right? And no permission needed. That's the other thing in these big organizations. There's such permission-seeking organizations. Mm-hmm. Like, it's like, if you feel like you need like 10 OKs to move a piece of paper, and that's like antithesis to innovation. So that was one of the biggest culture changes we had to make. It's like most of the decisions we make are two-way door decisions. Just make the decision. If it goes sideways, I got your back, and we can always pull it back. There's very few decisions that are one-way door decisions, as Bezos says, and those are consequential. And yes, those don't go rogue. We have to do it together. I think as that part of the culture change, that's when we started to see the metabolism really start to change. And with AI, because that culture had already been set, we started to reap the benefits.
I want to get into something that you worked on right before you left, which was the payment accounts or the skinny master accounts, and something that you and Governor Waller worked on together. It's being worked on right now, potential rollout by the end of the year, we'll see. But can you kind of just give us an overview of actually what the goal was with that? Because you mentioned hard access to the payment system, right? It's kind of like, you have to kind of be a member of the club to be a member of the club. This would make it a little bit easier for these companies in crypto, and not just crypto, but like, fintechs and innovative companies to be able to get access to the payment system. And I'll let you break it down, but like, is that essentially what the feeling was there? So banks aren't just the only ones in the club?
I think you answered my question. And Kraken, it's not hypothetical. Kraken got one.
Kraken, well, they haven't implemented yet, right?
Yeah. No, I think like you want a job at the Fed. You want my job? No, and listen, if Governor Waller gets, for those of you who've had a chance to meet him and do get a chance to meet him, he's very accessible. And I can tell you, like, he gets, most of the credit. Like, his zeal for innovation, especially in payments, is, just like, can't compare it. And having a leader like that by your side, it's any innovator's, dream come true. But exactly, and listen, everything from an innovation perspective, we definitely try to, embrace is like start with the gnarly problem. But listen, there's a reason innovation gets a bad rap, right? It's a bunch of weird people in a lab chasing some shiny object that doesn't deliver anything other than zombie projects that never die. So when you start things, you really want to say, what is that gnarly problem you're trying to solve? why does it need to be solved? Like, not all problems need to be solved, right? And then why are we uniquely qualified to solve it? And that third question is very important, and it's especially important, as you know, to Governor Waller, because he's a very big believer that the market should solve as many problems as possible, and we should stay out of their way, right? Mm-hmm. So by the time we got to solving it, we did a lot of work, including at the last SALT. We talked to so many builders, individually, in groups, to say, why is it that you need a master account? Like, break it down for me, right? We had a lot of spicy arguments, spicy conversation. We did design thinking, whiteboarding, like, to really get to the crux of what is that problem you're trying to solve. And then, a lot of steps led to, okay, what is realistically the solution that can be delivered that led to Skinny. I was told not to call it Skinny, but whatever. To Skinny, and and
catchy,
right? and I also give Governor Waller kudos. Like, he did something that's usually not done. He put a shot clock on it. He said, no, this is not going to take 20 years. I'm giving it 12 to 18 months, and we're going to get it done, right? Mm-hmm. And I'm going to be cheering for them. But that really was the essence of it. About there's a problem, let's get to the bottom of it. And another unique thing, progress over perfection, and that is okay. But for the Fed, oh my God, that is opposite to everything they do. Because in a central bank, but every regulator, until something is perfect, you don't ship it. And with this, we said, when we ship the Skinny, and we talked to a lot of the folks that will be potential users, it is not going to be perfect, it is not going to be pretty, but it'll be shipped, and we will make it better as we go along. Mm-hmm. That is opposite of anything, the Fed ever does. So a lot of kudos again, to Governor Waller for applying that, startup mindset.
Yeah, he's breaking the Fed. Good trouble, I think you said in the beginning.
Good trouble.
Yeah. Let's talk about stablecoins. I mean, the Genius anniversary is this week, and I think no one can argue here, it really opened up the payments innovation industry, right? I mean, just stablecoins are the topic of the year. When it comes to the Fed, though, I mean, do you see them taking sort of a leaf out of the payment modernization book, as it were? I mean, will the Fed ever get on, payment rails, blockchain rails, settlements, and stablecoins? I mean, that's probably a loaded question, probably something that you can't answer, but how do you see sort of the Fed, taking a leaf out of this modernization page that, crypto kind of brought it, and they're leaning into it now with, some of these innovations that you yourself have worked on?
Well, I don't work at the Fed anymore, so I don't know.
You don't, but you can.
I have all kinds of opinions. Well, first of all, congrats to everybody. Stables are real, and it's a 1-year anniversary. I think what I would say, without any precision, is one of the proudest things I was able to do is we hired about 12 to 15 engineers from the tech and crypto space. The only good thing that came out of that FTX disaster was I was able to attract some really baller engineers during that downfall and say, come serve your country, come work at the Fed. I used to call it FedCorp, Peace Corps for the Federal Reserve, to say, bring those skills, the smart contract, tokenization, but apply it to the payment rails that the Fed runs for the world, right? Mm-hmm. Listen, we all love to dunk on these old rails, but they clear trillions and trillions and trillions and trillions and trillions of dollars every day, and you don't hear a peep, right? And it gives the U.S. a lot of soft power behind the scenes. That's one of the reasons why the dollar is the reserve currency, right? But yes, you got to keep leveling them up, right? You can't get complacent. So we brought in that expertise and crypto technology, and now we're applying it, to strengthen and level up, existing rails. So how that connects to stables. Now, when Genius was happening, one of the things we looked at was how will fiat rails, which the Fed runs, so it's, we have responsibility and accountability, and stables, which obviously run on DeFi rails, is there intersectionality, and is there a role for the Fed? And, we talked to a lot of industry participants, and one of the use cases was, hey, if I'm a CFO at a company and I hold stables and I hold fiat and I want to seamlessly go back and forth, again, does the Fed have a role? Because we don't want to get in the way. Can the market solve this problem? So some of the work we did, and I know, Governor Waller's talked to you about this, is, we did some work with HTLC, one of the smart contracts, to say, how do we make that process super simple, right? So money can move very effortlessly. But again, we don't want to build it if the market can build it and the market can solve it. So that's really the process, at least my team and I went through, is we look at the full life cycle of a transaction, full life cycle of a process, and say, where will it touch the central bank? And are we, becoming an unnecessary clog? And if we are, how do we fix it?
Central bank digital currencies.
We killed it,
Your
which is
favorite.
the best thing I got to do with Governor Waller.
Did you?
I mean, no one's working on it, and it's in the bill, right? We
Well,
just
that's
got to
what I
get
was
it
going to say.
signed.
Was anyone actually working on it inside the Fed, to your knowledge?
No, we killed it.
No. Okay, good to know. Should the Fed be working on any kind of, digital currency in your view? Is there room for maybe a wholesale CBDC, if not
What's
a retail
the problem
CBDC?
that needs to be solved? Tell me the problem. Give me a problem statement, and then we will figure out what the solution is. I used to go to the BIS for a lot of meetings, and they love CBDC, and that's fine. Europe is doing their digital euro, and listen, the digital euro, there is a concrete problem they're trying to solve, right? And good on them. Show me a cogent problem statement for which the solution and the only absolute solution is a wholesale CBDC, and I'm happy to talk about it. Listen, I have no religion on, people are like, oh, stables or tokenized deposit. I don't care. Let the customer decide. Let the marketplace decide, right? I come from a place, I don't know, maybe I read too much Ayn Rand. I come from a place of, great. If you think your product is great, put it out there. Let the customer decide. But with CBDC, I haven't seen a very cogent use case that shows me that the only solution is a CBDC. But if there is, happy to have a conversation.
And then on AI, I know it's something you've been super.
I've been driving her crazy with all of my ideas.
She's like,
she's
AI,
being very
AI,
kind.
AI. What's your long-term thesis on AI?
I have many.
When it comes to, I guess, the financial, I would say the Fed, but I feel like we don't want to talk about the Fed too much because you're not there anymore. You're like, why are you asking me all these Fed questions when I'm not there anymore? I'm assuming the Fed's going to be using AI to as part of its modernization plans. But in terms of updating the financial system, as it were, in the U.S., what is AI's role? What are we going to see there? Is it agentic payments? Is that really sort of the use case there, or is there broader? What are you seeing?
I will actually answer the Fed question on this one. One of the things I'm super proud of our teams at the Fed and the leadership is we very early on decided that the Fed was actually a target-rich environment for the application of AI, and not just Gen AI. We looked at the entire AI stack. Again, you start with a problem statement, and if the answer is RPA, great. If the answer is Gen AI, great. If the answer is vintage AI, I call it vintage AI. It's not. If it's but we apply the right solution. So by the time I left, all developers at the Fed were AI enabled. Every developer's IDE was connected to Bedrock, right? Mm-hmm. In fact, in 2026, every employee at the Fed had AI in their employee goals. I'm very fond of the Charlie Munger quote, show me your incentives and I will predict your behaviors and outcomes. So when it is in my performance goals that I have to, be, and again, we were specific about, again, it wasn't grand goals. It was you have to be AI trained, you have to apply AI in your role in this way. Everybody from the analyst all the way to governor, and that kind of shows the Fed's commitment. If it's in your employee goal, even if you don't want to do it, you're going to do it.
Are we talking about ChatGPT usage, or are we talking about vibe coding?
Well, we used most of our AI capabilities through our cloud providers and through our vendors. We built certain models for some, very proprietary work. Mm-hmm. But yeah, everybody used AI, the developers used for coding. But we used it in all kinds of other use cases. But all to say, it was pervasive, and people had permission to use it in their day-to-day work. Now, again, in a guardrailed way, and with all the cyber and risk and compliance wrappers that it required, nobody was allowed to just plug right into the ChatGPT subscription that you and I had. Let me just be very clear, right? So there was a very safe and secure way in how that was brought into, just like it's brought into all the other organizations. So that's and with Agentic, that was actually one of the big things that we were starting to look at. How should we think about the intersection of payments and AI? I mean, this is my personal thesis, nothing to do with the Fed. I mean, I'm very bullish, as you know, and I'm bullish because if agentic commerce manifests the way that we all think that it will, and it's not going to happen right away. It'll probably take like a good decade, just like e-commerce. It's going to make e-commerce look like a joke, right? Because now this is machine to machine. The volume and velocity of payments will supersede anything that we've ever seen. But it's going to need a substrate for payments. I love FedNow. I heart you, FedNow. But there's no payment rail that's going to support that efficiency or that volume or that velocity of payments. And we are underestimating the fact that we have a regulated US dollar stablecoin approved and just sitting there. And for those of you who know S-curves, so as the S-curve of AI and agentic are just coming, the S-curve of stablecoins are just coming. And again, my thesis is they're lined up perfectly for that Cambrian moment. I mean, like Uber just didn't happen, right? Uber happened because location technology, mobile technology, a bunch of things were ready at the right moment and connected. And that's why I'm bullish about agentic commerce. And if it's run on stablecoins that are US backed, hey, that's dollarization on steroids, which means people are clamoring for US treasuries, which means the dollar is further strengthened. Sorry, everything comes back to, the mighty dollar. But that means, AI policy has to be done, again, in a prudent and pragmatic way. Mm-hmm. So that's where I see the intersectionality of AI policy connected to a lot of things that are happening around payments, around financial infrastructure, things that we have to refine and redo with fraud, because fraud is going to completely collapse in the world of agentic commerce, because today when a machine conducts a transaction, it's fraud. Well, in the future, when her agents and my agents are out there buying shoes for us or ETFs or God knows what, how are you going to know what's a real agent doing something for Ellie and what's a North Korean bot that really is trying to attack you? So we're going to have to redesign fraud. We're going to have to rethink identity, which means for all the builders in the room, ideas for startups. So
there you go. Sunayna, what's your next move?
I don't know. Does anyone want to hire me? No, I'm kidding.
There we go. That's why I asked that question.
I promised my family I was gonna take a break, and they all bet on probably on Kalshi that I wouldn't, and they're probably making a lot of money. I'm helping out with some AI policy stuff right now, and I am figuring out what I want to do next. My cheekiness aside, I do welcome ideas and advice, but I haven't landed on anything concrete yet.
Okay. Well,
and I think we're getting the signal. Thanks for letting me.
Thank you, Sunayna. Thanks, everybody, for listening.